Alrighty. Hey, good morning, everyone. I think we're up and running. Give us a shout out in the chat if the stream's working. Looks like it's doing good. A few of you guys jumping on now, which is excellent. Good to see everybody. Good morning. Welcome to another Wealth Coffee Chat. Jason Witten here with you guys. If you haven't met me before, give us a shout out in the chat. Say good morning. All right, there we go. The chats are coming through now, which is awesome. Looks like the old lives in YouTube and Facebook are all warming up. So great to see you guys here. Good morning, Jay. Good morning, Simon. Trina, how are you, mate? Alison, Debbie, Margaret, Zafar, Heath, Nathan, Facebook user there. I think someone might be in the mentoring group, one of the private groups. Good morning to you. Heather. Hey, good morning, Heather. I'm going to give you a call in a minute, Heather. I need to talk to you. Hope you're awesome. Hope you guys are awesome and well on the 11th of August. So close, so quick this year's gone. It's almost Christmas, team. Christmas gang. Unbelievable. Like I said before, Jason Witten's my name. If you haven't met me before, give us a shout out in the chat. Tell us that you're new in the feed here. Just so you know, I've been doing this for over a couple of years now. Every morning, get together with a few crazy crew, talk about property investing, few tips, few techniques, few strategies. I've been property investing over 20 years, done a few deals, and each morning share a little bit of the wisdom to try and dispel the fear and ignorance that is out there in the world of investing. Sadly, very sadly, there's a lot of information available, but not too much knowledge, to be honest. So every morning I get together with a crazy crew and we try and crack the code about making sure you do it right, you do it well, you do it safe as a property investor. So I call it Wealth Coffee Chats. So yeah, welcome along. I want to talk about asset protection today, and I hear this conversation happening quite often out in the marketplace. Sadly, in the world of property, it's quite confusing, and unfortunately, there are a few people out there who use the asset protection, the fear of getting sued, as a way to leverage you into setting up structures and incurring costs for things that potentially, well, in reality, 9 times out of 10 are probably unrequired for where you're at. Now, good morning to Roscoe. Good morning, brother. Got to speak to you too. Kevin, Chris, Justin, Arnie, Teresa. Great to see you guys there. Teresa's a newbie. Hey, awesome to have you here, Teresa. Welcome along. Any questions, chuck them in the chat, gang. I'll see if I can get to them at the end after we have a bit of a yarn about asset protection. So, what are we trying to protect? Tell me in the chat just quickly as we're rolling along. What are you guys trying to protect here? You hear the words asset protection, and what are you worried about? Like, you know, what's the number one or number two things that you're concerned about when it comes to this asset protection concept? Because I've spoken to a lot of people and they're often uncertain or unsure or not really understanding what this asset protection stuff is all about. How can you protect yourself as an investor? Certainly around real estate, certainly around property is an important conversation. For most of us sitting here right now, if you are PAYG, you have a job and you work for someone else, and nothing wrong with that, by the way. I'm a massive fan of these things. Then this conversation this morning, this conversation is going to be for 99% of someone who's got a job and they work for someone else. Okay. The next part of the conversation, I'll do a part 2 of asset protection conversation team will be aimed for business owners who take other risks, the directors, and other risks associated with investing, and we'll talk about that. So part one today is predominantly for someone in PAYG or a small business with not a lot of moving parts. If you've got a business that you sell, clothing on eBay, or there's only you and one other person or something like that, this is for you, okay, when it comes to asset protection. Because we want to protect ourselves. A few people said, protection of your principal place of residence and yourself, that's cool. And I'm sure you don't, like people say, oh, if you don't have asset protection and you get sued, you lose everything. That's actually a crock of rubbish and shit, team gang. And what happens is that well-meaning but ill-informed professionals want you to set up things like companies and trusts, okay? So Mark just asked a question there. Does having a company structure under your business protect your personal assets if something goes wrong? The answer, Mark, is no. No, it doesn't. And this is the big lie, team. Okay, but let me sort of break it down. I'm going to do it in two parts. And Mark, for you potentially, the next part, so part B, we're going to do this tomorrow, is much more appropriate if you're a business owner. So we're going to do PAYG today, or very small business. This is for you. Number one thing, team, what is the absolute number one thing? We're not talking companies and trust structures today. If you are a PAYG and you have a company trust structure, they usually do it like this, a company and a trust structure. And they say, all right, put your assets in there because it's asset protection, all right? That's not true at all, okay? If you break the law, if something goes wrong with your property, if you've got a property here and you're the landlord and something goes wrong with that property and you didn't put fire alarms in, you didn't maintain the property properly, whatever, that doesn't protect you from getting sued and losing that property, okay? You can join it all. Everyone can see through everything these days, gang. What it may do is slow some things down, but at what cost and at what likelihood will this occur? Because here's what I do know. I've been helping property investors in property investing over 20 years now, and I can count on one hand, I have two out of over 7,000 clients that I have. Now, maybe some of them haven't told me. 2 out of 7,000 clients who probably own between 14 and 20,000 properties because they're all multiple property owners. I've got 2 instances of a tenant suing the owner for something that went wrong. 2 out of, call it, let's be conservative, 14,000 properties, okay? The likelihood is really low, okay? Now, and even if something goes wrong in there, if you didn't put the fire alarms in when you should have as a landlord and the house burns down, you're at fault. You broke the law. You didn't do what you meant to do. So none of this will help you. Nothing. Asset protection is for you accidents and things that you couldn't control or you didn't know was going to occur. Okay. Hopefully that makes sense. So companies and trust structures, you own a property in the company and trust structure. Number one, it costs you between $2,000 and $5,000 to set up. $2,000 and $5,000 to set up. It costs you between $2,000 and $3,000 every year to do the taxes, right? And then the depreciation is trapped in the company and trust structure. So you as a PAYG earner, your income cannot offset any of the taxes that you earn as PAYG. You can't offset it against any of the losses, paper losses, in the trust or the company. Ludicrous, stupid, ridiculous. You're a PAYG, you have no way of getting an income into the company or trust to offset any of those losses, right? It makes me cranky that professionals who say they know what they're talking about set these up for people in property investing and cause massive expenses when it's unrequired. as they go along, right? And when you get over here, you try and borrow at the bank and you get 80% if you're lucky. They don't like companies and trusts for high leverage, 90% lending. It costs you thousands of dollars to run each year. You can't get the depreciation. And then what happens? All right. You struggle to own and keep the property. I'm not a fan of these without a lot of consideration, gang. Okay. So just to be really clear in there. So let's get to the point of asset protection for you as a property investor. Number one thing, what's the most important thing for you as a property investor for asset protection when it comes to property is getting the right insurance. Team, gang, insurance, that's its job. That's its job. Its job is to protect from accidents. Its job is to protect you from things that go wrong, okay? There's a number of good insurers out there, and a lot of them got tested in the corona and the corona pandemic, and are still being tested now. Put a chat into the mentoring group because there's 2 or 3 that have stood the test in the last 2 years, and there is many that have fallen off when it comes to loss of rent, damages, tenants, and all that sort of stuff. 95% of any accidents or problems or challenges that you don't expect are going to be dealt with by insurance, gang. Okay? Absolutely. Alison nailed it. Insurance is vital. Okay? Number 2, there are 3 things that can help you with asset protection if you need to when it comes to being a property investor. PAYG, owning those properties in your own name is most effective, and you want to protect yourself, okay? What's the other one? When we have a look at the challenge here? All right, your property manager. Team, if you get a good property manager, they will vet the clients properly. They will use the right tools. They will manage the relationship. They will chase up the late rents. They will maintain the property properly. That protects you from the challenges of things going wrong with a bit of real estate. You get a lazy or incompetent property manager or inexperienced, they put in the wrong tenant, and you'll hate the experience, okay? Oh, there we go. Alison and Mitchell have nailed all 3. The property manager team, gang, you've got to get a great property manager. They take the challenge out of owning the property and allow you to have a little bit more mind space and less stress, okay? And the third or the last one, asset protection, buffer / positive cash flow. Team, gang, know your numbers, know your money, know that you've got money set aside if something goes wrong, because I can tell you after doing this for 20 years, the reason people lose money or end up having some problems with their real estate portfolio is they have a portfolio that cannot sustain itself. And these are the things I can tell you, 99.9% of the problems that I've ever seen my clients have a challenge with, they lose a job, they get a divorce. I'm telling you, there's the 2, lose a job and their income's not as good anymore. They get a divorce, and by default, the money or the properties that were set up that were relying on their income or their buffers weren't there now have a problem, and the properties start to have a detrimental financial effect, and now it blows everything else up. Okay? do your numbers, get insurance, get an awesome property manager. Buffer in place, positive cash flow, and obviously the other three qualities that I talk about all the time, gang, is the quality of the property, the quality of the tenant, and the quality of the location. If you put that on the inside of this asset protection, if you think about it in that way, right? If you think about it in that way, you go put the three Qs in here: the quality property, the quality location, and the quality tenant. You put those three on the inside and those three on the outside, asset protection will be as good as you can get it for PAYG small business. And how much does it cost for you to get this asset protection in comparison to the other one? There's no structures, there's no complications, it's straightforward and normal, it gives you the ability to borrow and continue to invest, etc, etc, etc. All right, so part one, that was part A. Tick. Give us a shout out in the chat if you got any questions, but that's it, gang. For me, for most of you guys in the PAYG space or a small business that's uncomplicated with low to no risk, you know, you don't have machines that you're leasing, you don't have rental that you're on the hook for, you don't have all these other risks or challenges, then this is very appropriate, very normal, and very useful to do it this way, okay? Part two tomorrow, I'll do a quick business one for business owners. We'll do some asset protection conversations tomorrow. Now, that could be quite interesting because asset protection in the world of companies and trust structures can get a bit complicated, but I'll try and break it down, make it simple. Well, there you go. All right, gang, that's it. Wealth Coffee Chat done. Hopefully you guys are awesome and well. And wherever you are, stay safe, stay sensible, and keep your eye on the prize. Remember, this thing's a marathon, not a sprint. Buy well, never sell. That's what we say around here. All right, gang, you're awesome. Great to hang out with you. Take care. Bye for now. Have a good day.